All right. Awesome. Chalo. Guys, are you very clearly able to see me, hear me both? May I please come to know from each one of you? I need to know that. Are you guys very clearly able to see me, hear me both? Each one of you. I can see quite a lot of participants have their respective cameras on. I would sincerely request, please turn them off. That's a humble request. While we move forward in this session, that gets a little disturbing to the other participants, right? So that's the only idea. May I request all of you all to please turn your videos off? Ishwari, Balaji, Karuna, Unnati, Vinay, Nishant, Kishan. May I request you all to please turn your video off? Thank you. That will be great. All right, awesome. Let's get started. All right, one last quick check. Are you guys able to see me, hear me both? In the chat box, please do let me know in the chat box. And let's get started. Okay, there you go, there you go, there you go. That's great, that's great. That's exactly the way. I can see quite a lot of participants still have their videos on. I am sincerely requesting you all to please turn it off. I'll be grateful if you turn it off. Thank you. Santosh ji, can you please turn your video off? Thank you. That's great. Awesome. Chalo, let's get started. Let me also check if the recording is on. All right, the recording is also on and it should be fine. And this is it. Awesome. All right, one last quick check. Are you all very clearly able to see me, hear me both? Please let me know. And is the screen visible as well? Are you guys able to see me, hear me, and the screen is visible? One last quick check before we begin. Let me know in the chat box, please, quickly. All right, that's great. And the recording is also on. All right, super. So how many people have joined in? Close to 420 people is the count right now. This count might quite possibly move up to 500 also after a while. All right, chalo, let's get started now. Before I move ahead, one quick check with each one of you. How many working professionals in the batch? Capital WP in the chat box. Write capital WP in the chat box. Working professionals. Pavitra, Jayalakshmi, Christopher, Pranjal, Mudassir, Sarita, Rajkumar, Nilesh, Khushbu, Shrikant, Sharanya, Parinita, Hemant, Ashwini, Abhijit, Nishtha, Anandi, Mahendra, Santosh, Arti, okay, Shubham, Devdutt, Ayush, Manisha, Srinivasan, Noman, Shiv Sharma, Surbi, Muskan, Neumann again, Kavita, Ravi Palwal. That's great. All right, awesome. How many students in this batch? Capital S. Capital S in the chat box. How many students? Ravi Teja, Jagrati, Kiran May, Adarsh, Nivya, Ashi, Yash, Abhishek, Yash again. Oh, so many Yashes. Okay, Banu, Atharva, Meghna, recently qualified. That's great. I can see quite a lot of chartered accountants as well. So great to see people from the same fraternity. Nitesh Siddhant, Ravi Paliwal, and Unnati is also recently qualified. That's great. Shilpa is a chartered accountant. Chan is recently qualified. Great. It's just 17 days and you are still enjoying. That's great. That's great. That's great. Awesome. 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 All right. Acha, a second. One second again. How many senior management level people like CXO level, CEO, MD, chairman, CTO, COO, CFO, anybody of that sort? How many people from the senior management category? CIF, CMA. Okay, CFO Gurdarshan ji, thank you. Thanks for being a part of this workshop. That's great. What about the others? Co-founder and CEO of an asset management startup. Piyush, we need to connect. We need to connect. That's great. Garima cannot hear. Garima, everybody is able to very clearly hear me. I believe there's some challenge at your end. Please do check. That's my humble request. All right. Chalo. All right. Thank you so much for that real quick response that I was expecting from each one of you. Really appreciate that. All right. So welcome, guys. Welcome to the Power Packed 2-day workshop on financial modeling. In the next 2 days, we are going to learn how to build a financial model right from the scratch in terms of the complete 3-statement model building process. All right. So Before we move ahead, today in this workshop, allow me to introduce myself briefly. I'm sure you all must have read something, right? Something about me while you registered for this workshop. So who am I? Who the hell am I? And why is each one of you learning from me? So my friend, my name is Pranav Dedia. I'm a chartered accountant by profession and an investment banker since the past 7 years. During my corporate experience, I have had the fortune of building various models in Microsoft Excel for a variety of purposes, be it a financial model, be it a valuation model, be it a model for valuing employee stock options, some dynamic models for private equity funds, wherein the investment team can see their entire pool of portfolio companies on one single Excel spreadsheet, and where things simply change at the click of a single button, right? These are the kind of models that I have built myself, and I have worked on them in my experience as well. And over the course of extensively working for these many years on Excel and financial models, I have been able to identify some of the pain points that people generally face while they are working on multiple Excel spreadsheets and multiple financial models, right? So this entire two-day workshop on financial modeling, it's going to be a mix of financial modeling and lots and lots and lots of tips and tricks in Microsoft Excel as well, right, guys? So that's a little something about me. I thought I should just acquaint you with who exactly is the person that you all are going to listen for the next 6 hours. All right. Then the next question I am sure that all of you will be certainly having is, Pranav, what's this whole workshop thing about? Well, my friend, this workshop is all about learning, understanding, and mastering how to create a dynamic financial model that is typically used to carry out financial analysis. So, while we partially complete the financial model building process with specific targets today, we will have the final mega webinar tomorrow, which is on Sunday, to end this workshop with a boom, like literally a boom. I'll be sharing multiple tips and tricks in financial modeling, many of my learnings and best industry practices as well in the mega webinar, right? But guys, please do note tomorrow's session, which is Sunday, which is a mega webinar, you will have to compulsorily attend that live. It does not get recorded. I do not have the authority to record it. All right. And hence it is kept on a Sunday when all of you will be free. So I would request all of you all to attend certainly tomorrow without missing out on anything. All right. Then first things first, in case any of you has not joined the WhatsApp group by any case, please join the same. The link to the same has been shared with each one of you in your email, which you must have received when you registered for this particular workshop, right? Then the next thing that you all need to do is write this particular message that you all can see right now on the screen. Okay, on the screen, all of you all are able to see one particular screenshot of a message. You need to exactly write that message hi dash fm the way it is written here. All right, it has to be hi dash fm. You write hi fm, no response. You get fm, no response. Hi, no response. Hi space dash space fm, no response. This is precisely the way in which you have to write this particular message. Once you've written that, you will receive an automated response to it, which has a PDF relevant from the standardized instructions for this particular workshop. All right. I am waiting here for exactly 2 minutes. Please get this done. Guys, you are not supposed to write this message hi dash fm in the chat box. You're not supposed to write it here. You are supposed to write it in the number that's mentioned on the screen. All right. So not on the chat box, not on the chat box, please. It's not going to serve any purpose. Waiting here for last 1 minute. All right, done. Then moving forward to, see, I've already seen a lot of people asking me a few questions which have been asked to me previously by a lot of people. So there are a lot of frequently asked questions. I've already seen the excitement of a lot of people are raising questions that a lot of, I mean, I would say they are related to either finance or related to careers, or what should I do if I want to get into investment banking? How will this particular workshop help me if I'm a chartered accountant? All these kind of questions I've already got in the chat box right now as well. I have heard all of you and I have all of you all covered as well. So don't worry. There is a way in which this can be solved quickly without utilizing a lot of our time at this particular stage. Okay, just give me a minute. What I have done is there's in, okay, so there's one sec. Let's this, huh. So what I've done is for all of you, there is a particular Q&A highlight section on my Instagram page. You can see there is a Q&A highlight section. This particular section has a lot of frequently asked questions. So my simple request to all those people who are asking me either career related or finance related or investment banking, private equity, venture capital, any kind of questions on those lines, my humble request to you would be, please go ahead and check the Q&A highlight piece herein. There are a lot of questions which I have already answered. In my opinion, this might solve 50% of your problem. In case if it doesn't, you can always DM me here or either on LinkedIn as well. Okay, so don't worry on that. Waiting here for exactly 15 seconds. Please take a screenshot if you all want to, then we move forward. So whenever you get time today, tomorrow, you can just spend 5 minutes, sit and read any of those questions in the given section. If you are a chartered accountant in practice, how will this workshop help you? If you want to get into investment banking, what should you do? If you are an undergraduate, how will this particular workshop help you to get an internship or a job? All these kind of questions have been very frequently asked and they have been answered as well. So if you wish to take the advantage of that, you can. All right, chalo, moving forward. And there you go. This is okay. I hope each one of you all are through with this particular thing, which is what we had to get done. Chalo, now I want all of you to open the Excel spreadsheet, which has been shared with each one of you. Let's do that. Chalo, is the Excel spreadsheet open, guys? Now, before we move ahead, you all just need to have an overview of what exactly are we going to do in the coming 2 days. All right. For what reason, I am going to just you all quickly through how exactly this works so that you all get a perspective. Okay. Now, what do we cover today? What exactly are we going to cover today is what you all need to understand first. All right. The Excel spreadsheet has been shared in the WhatsApp group. In the WhatsApp group, on the description, there will be a particular link. The link has the Excel spreadsheet. Okay, just go ahead on that link and try and get it downloaded. My request to just one of you all, any one of you all, if you all can take the initiative of sending that Excel spreadsheet right now on the chat box as well, so that for people who don't have that Excel spreadsheet right now, they can very quickly access it. All right. and I'll be just moving forward with what exactly are we going to cover today. Okay. First thing, we will be learning the financial modeling process. Sir, isme naya kya hai? We will be analyzing historical financial statements. Then we move forward to forecasting the company's future performance, right? First, we look at what exactly is the company's past for you to understand what could be a possible trend that you can carry going forward. All right. And going forward, what you will do is forecast company's future performance, build the forecasted P&L statement and balance sheet. Okay. This is what all of you all are going to be doing alongside me today. Are you excited when you particularly read this? Guys, are you excited? Do let me know in the chat box. जो लोग भी yes 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 बोल रहे हैं, इसमें आप मेरे को बोलो, मतलब I'll be very honest with each one of you. If I read all of this as a workshop participant, I will not get excited, honestly. Why? Because this was very much expected. You will learn financial modeling process. 100% sir, that was expected. Analyze historical financial statement. 100% sir, that is expected. Isme naya kya hai? Let me tell you what exactly is going to happen with each one of you alongside this as well. The first step is learning financial modeling process, but you will be learning that not just like that, but without actually touching your mouse. The entire financial modeling process that each one of you will be learning tonight and tomorrow as well, none of you will be allowed to touch your mouse. The entire financial modeling process can be handled only by way of your keyboard. You do not need a mouse, right? That's what each one of you is going to do as point number 1. Second thing, analysis of historical financial statements would be done the way a financial analysis pro would be doing it, right? Your company's future performance will be forecasted in a way in which a business owner runs his particular business. Each and every line item in the Excel spreadsheet that we are going to be building upon, you will be understanding what exactly is the business logic of each and every line item. See, beyond a point, what happens in financial modeling is that you will get a fair sense of what you've done, but understanding each and every line item is very crucial, because beyond a certain point, this gets a little monotonous at some pieces, right? So each and every line item in the Excel spreadsheet, in the financial model, we will be having a business logic of what exactly will an entrepreneur running their own business think about when they are looking at this. All right. And then the forecast of P&L and the balance sheet, the way an equity research analyst would be doing it, is what each one of you will be learning as well. Right, guys? Now you do let me know in the chat box. Are you excited? Let me know in the chat box. Right, guys? So this is what all of us are going to be doing today. And alongside this, for each one of you attending this particular workshop on a lazy Saturday evening, when the whole universe is going to enjoy and you have thought of upskilling yourself, I am going to be giving each one of you a bonus trick at the end as well. Right, guys? Chalo, let's begin. Guys, shall we begin? Do let me know. Each one of you on the Excel spreadsheet, please. Each one of you on the Excel spreadsheet. Let's get started. Chalo. Today's session is already getting recorded. The recorded version will be shared with each one of you. You can access it for 15 more days. Right? That's the answer to everybody's question. CNA Saturday, Sunday ka wajud bhulwa diya, she's saying. I can understand where she's coming from. All right, let's get started. I want each one of you to be on the Excel spreadsheet right now. Everyone on the Excel spreadsheet, please. Now, what I have done in the Excel sheet that is shared with each one of you, I have information for 4 years of a hypothetical company. Now we are starting with the core of financial modeling, okay? Till this point, I have just given you a broad framework of how things will work so that you will be able to connect the dots towards the end of the session and tomorrow as well, right? So that was the idea of giving you the entire framework. Now I want you to be a part of the entire process very actively. Right, guys? So that is what needs to be done. All right. What I've done is I have one hypothetical company limited that I have given to each one of you, which has the PNL and the balance sheet for 4 years. Right, guys? Just give me a yeah, there was just somebody at the door, so I had to go. Huh. So moving forward to what I've done is 4 years of historical financial statement information from the profit and loss and the balance sheet statements, right? So this is P&L, this is balance sheet. Now what I have done is all this information for the historical period, okay? All this information for the historical period, what I have done is I have just simply put inside this particular 3-statement model that we are going to be building up for today. Okay. Now, 1 second. There are a lot of people who are requesting me to change the chat settings to hosts and panelists only because they are getting disturbed by a lot of messages that are coming on the chat box. With your permission, should I do that? Just want to understand from all of you, with your permission, should I do that? Should I like just change the chat settings to hosts and panelists only? Because usse kya hoga कि at least you will not be disturbed by all these messages. So I think that's a great suggestion. Perfect. Okay. Everyone's agreeing to it. Let's do that. Let's do that. Whosoever that person was, guys, thank you so much. That's a great suggestion. We'll try and do this. All right. Chalo. Moving forward to what I was trying to speak about is the profit and loss and the balance sheet information. Now, what happens is this kind of a format, okay, this kind of a format is something that's relevant from the financial reporting standpoint. Okay, when I say financial reporting, as per the Companies Act, how are you supposed to report financial statements is what the P&L and balance sheet piece herein reflects. Okay, when I am building up a financial model is used for decision making. Financial model need not always follow a financial reporting framework. That's not required at all. I need to use a 3-statement model, a financial model for my decision making purposes. So that decision making ability is what we are going to be focusing on while we build up this particular financial model. Okay. So this balance sheet, this entire balance sheet, I have directly simply put it up here. Okay. You can see all the balance sheet line items are simply put here one after the other. There is no greatness in copying data from one sheet to the other. I don't want to insult you by putting you through a process of copying data from one sheet to the other like this. We are not here to do donkey work. We are here to actually sit and analyze how you're supposed to analyze a particular company and how a financial model needs to be built. Okay. So what I've done is I've already put in historical information for you in the 3-statement model. And at every point, I will tell you what exactly is the thought process of why we have done what we have done. Okay. Is each one of you with me till this point? Let me know in the chat box. Guys, let me know in the chat box. Can we move forward? Is everyone with me? Right, guys? It's going to be a super power-packed session. You will see the same element of energy coming from me right since the beginning up until end and even tomorrow, right? So my energy will continuously stay at the way it is. My only humble request to each one of you, when I ask you a specific question, that you please let me know in the chat box, are you with me, etc., etc., etc. Please respond in the chat box. That is the only thing that continuously adds fuel to my energy. Right, guys? Is each one of you with me? Can we move forward? Chalo, let's do this. Now, what exactly happens is, like I told you, we have the profit and loss statement, which is already here. We have the balance sheet statement, which is already here. Okay. Now, what you first need to understand is how exactly has a particular company performed in the past for you to be able to forecast for that company in the future. Right, guys? That's what we need to analyze first. So the first and foremost thing that I will look at when I look at a particular business is all these line items, the P&L assumptions and the balance sheet assumptions. Now, why these line items? What exactly is the thought process behind these line items? For that, I had given you all a notes PDF. Okay. I hope each one of you got the access to the notes PDF, which was shared with all of you. It is there in the same link from where you have downloaded the Excel file as well. And it's there in the WhatsApp group as well. All right. So that notes PDF is what each one of you will be able to correlate to very easily. Right, guys? So the first thing is revenue growth. Now, let's understand why we do some things the way they are done. Okay. You have specific cells colored in yellow here. Okay. Now let's wait. There are a few people who unfortunately have not had access to the notes PDF. It's absolutely fine. Okay. For all the people who don't have access to the notes PDF, it's absolutely fine. Do not worry. I will be explaining the logic of every line item that we build in here. Right? Everyone with me? So do not worry about I don't have the PDF. मेरे पास PDF नहीं है. मैं कहाँ से सीखूंगा? मैं कहाँ से सीखूंगी? Do not worry about it. Your learning is a question on my table. It's not your headache. Right, guys? So just be with me in the process. Trust me, you will enjoy it. Trust me. So the first thing is revenue growth. Okay. Now, any growth related assumption, any escalation related assumption. Okay. When I say growth related assumption, मतलब last year मेरा revenue था 10 करोड़, इस साल मेरा revenue हो गया 12 करोड़, तो 20% growth हो चुकी. 20% is my growth. That's a growth related assumption. Last year my salary was 10 lakh rupees. This year my salary is 15 lakh rupees. I got a 50% hike. It's an escalation related assumption. Okay. For any assumption which is either growth related or escalation related, you need to have the calculation starting from year number 2. Why year number 2? Because that growth will always be calculated over the previous year. So I will not be able to calculate the revenue growth for the first year because I don't have year 0 information, right? So that's the whole reason why these particular cells are colored yellow herein, because they will be calculated from the second year. For other numbers which can be calculated from the first year itself, you have the colors in yellow. All right. Now, when I look at this particular revenue growth assumption, what will be my revenue? Let's go to the P&L and check. This is the profit and loss. The revenue has grown from 201 to 235. Okay. So 201 has become 235. Let's try and calculate what has been the revenue growth. So that's 235 divided by 201 minus 1. This is how you calculate the growth of a particular year. Okay. And when you calculate this particular growth, this is the formula E32 divided by D32 minus 1. Whenever we build a model and whenever we are performing certain elements of calculations, the calculation are already here in column C for everybody's reference. For example, at any given stage, if you unfortunately did not follow what happened, you have to look at column C. Column C is formula FYR. FYR means for your reference. Okay. So E32 divided by D32 minus 1 is the formula that we have used here, is something that I have written down for each one of you in column C itself. Right, guys? So will column C be super useful to you guys? Will column C be useful? Do let me know in the chat box. What I have done is I already have a lot of things written down in the Excel spreadsheet for each one of you so that none of you fall back on how we are moving forward. Right, guys? Chalo. So this is what we are doing as 17%. That's my historical year to revenue. Now what I will do, I will simply copy this and drag it across to understand what is my revenue growth percentage for all the 3 years. Right, guys? Chalo. Perform this calculation and let me know what is your revenue growth percentage coming to. Are you getting same? Are you getting a little different? Please let me know. चलिए सर बताइए. Same? Okay, great. Same. Most people are getting the same. That's great. That's great. That's great. Okay. So that's the revenue growth assumption. Okay. For the, sorry, it's not an assumption. It's actual reality of the past, basis which we will take revenue assumption for the future, which is latter. Okay. Then coming to COGS. COGS means what? Cost of goods sold. Okay. Now, as I told you, we will be performing everything from the logic of a business entrepreneur. Okay. What is the business entrepreneur doing in this case? Let's say this is a, एक एकदम simple example बोलो चलो कोई भी. Let's say this is Parle G. All of us have had Parle G in some time or the other. हमारे life में हमने Parle G खाया है. We will try and understand the entire thought process of every line item that we are building upon with the example of Parle G. Okay. Parle G has grown 17%, 17%, 17% in the past. Okay, point taken. Then what is Parle G trying to understand is that when I sell a 10 rupee worth of a Parle G biscuit packet, I sell it, customer gives me 10 rupees. But how much did I actually have to spend on manufacturing, on actually producing the 10 rupees worth of Parle G biscuit packet? Okay, that is COGS, cost of goods sold. Cost of goods sold. Goods sold is what? 10 rupees ka Parle G biscuit. What is the direct cost that was incurred on that particular packet is what we are trying to understand in this particular case. Okay. So the COGS will always be calculated as a percentage of revenue, because you have to understand it this way, that I am selling a 10 rupee worth of Parle G biscuit. 4 rupees is my maida cost, my wheat cost, my water cost, my sugar cost, my raw material cost, all of that put together, which I mixed, and I reach to a point where I get say 4 rupees cost. 40% is my COGS margin. Okay, that is what we need to do. So what we are trying to do here is trying to understand what will be my COGS margin. So if I look at the numbers herein, it's 108 divided by 201, and that is what will give me the COGS margin. Let me know what is your number coming to. Yes, in COGS, what we are trying to include, Soumya, is the direct allocable cost of that particular product. And we have taken the total operating revenue only, right? Is each one of you with me till this point? Can we move forward? I will keep taking your confirmations so that I understand that the entire batch is aligned with me. I don't want any of you to go home with your doubts. Huh? Acha, one more thing. What will happen while we will be performing the exercise, at some point in time, some of your questions, unfortunately, might not get answered at that moment itself. Okay. Why? Because a lot of people ask me a lot of questions, and unfortunately your question got skipped. So my idea is never to skip anybody's question. But while we move forward, at some point of time, unfortunately, if your question gets skipped, do not worry. I will be the last person to sign off from this call tonight. That's my word to you. And even before I leave, I will ask you 100 times, is there any other question? Is there any other question? Is there any other question? Okay. So just stay in the process. It's important for you to stay in the process. Don't be very jittery about one specific doubt that unfortunately could not get solved at that point of time. Okay. Sure. Let's get started. Saras Pawar, 54% is the cost. It's not his profit margin. Profit margin is 1 minus 54, which is basically 46%. Ankit, yes, you have to do this alongside me. Viraj, you need to take revenue as a denominator, because as I said, कि अगर आप 10 रुपए के पार्ले जी बिस्किट पे 4 रुपया खर्चा कर रहे हो, So you are basically doing a 40% cost. So when we say 40% cost, how it is calculated? 4 divided by 10. So 10 is what? It's your revenue. So that's how it is. Yeah. Yeah. So Nivi, what I'm doing is whatever I speak in Hindi, I speak in English also. So don't worry. You are not missing out on anything. All right. Excel cannot be in view only mode. You need to enable editing. As soon as you open the Excel spreadsheet, you will have enable editing option somewhere here. Just click on that. You will absolutely be able to edit everything. Right, guys? Chalo. Then coming to employee cost. Employee cost, I don't need to explain. All of you all know that when you come into an employment, you will have a yearly increment plan, right? So your employee cost is always supposed to be calculated as a growth factor as against a margin factor. All right. So what I need to check is what has been my employee cost last year, which was 40, which was 16, and it has become 18. So what kind of a percentage growth am I getting is what we try to look at. Kanupriya, the Excel sheet has been shared on the WhatsApp group. Please check it. In the WhatsApp group, on the description, there is a link. In that link also, this Excel spreadsheet is there. All right. And don't worry, we've not yet gone too far. And you always have the column C, which can take care of it. Yeah. Shortcut for replicating this rightwards is you can write Control R. The shortcut is Control R. When you want to do it rightwards, shortcut is Control R. All right. Then other expenses, you don't need to check other expenses in the historical period. I will explain what is the thought process in the other expense line item, but it's only for the forecast period. Okay. Then coming to EBITDA. What is EBITDA? It's earnings before interest, taxes, depreciation, and amortization. EBITDA as a number is very important from a decision making standpoint because EBITDA is what reflects the cash profitability of a business. Okay. EBITDA reflects the cash profitability of a business. So it's very important that way, which is why we have this as a line item in the P&L assumptions as well. And EBITDA also, any profitability number will be calculated as a percentage of revenue, right? It's very obvious thing to understand that. Let's go to EBITDA. So that's my EBITDA number, which is 37 over revenue, and that gives you approximately 18%. Shamin, the same Excel sheet has been shared because a larger part of the audience has the same Excel spreadsheet. Linashri, in revenue growth and employee cost, there is -1 because we are trying to understand the growth factor. In Excel, this is how you calculate growth. Everything becoming yellow, it's absolutely fine, Nivi. No problem. It's absolutely fine. It's a little complicated to explain at this stage. So I would suggest you can simply use Control R. That should be useful. EBITDA can be calculated in the first year because it's a percentage of revenue, right? That's how it is. Then coming to depreciation. Now I am going to ask you all a series of questions and you have to first respond and then perform the calculation, okay? When I start a business, okay? When I start a business, my fixed assets, which I have purchased as at the beginning of the year, can I say they will be used for the whole year? Right? Whatever assets I have at the beginning of the year, assuming there is no addition to fixed asset except what I added on day one of the asset, right? Can I say I will utilize those fixed assets for the entire year? Correct. Now, the depreciation that will be charged in the profit and loss statement, okay? Depreciation is usually charged at the end of the year in the profit and loss statement. It will be calculated on the opening balance of fixed assets or on my closing WDV. Obviously on the opening balance. आप एकदम logically समझो. अच्छा, let's understand a very simple logic. Let's understand a very simple logic. Let me take the example. Okay. Okay. You have a loan. Let's think we have a loan. This is 2022. These are the years. Okay. You have a loan. You have taken loan on 2022 is when we are beginning here. Okay. You have taken a loan of 1 lakh. Correct. You have repaid at the end of the year 10,000. Closing balance 90,000. My question to you, interest will be calculated on 1 lakh or 90,000? Interest will be calculated on 1 lakh, barabar, because that is the opening balance. You logically think that you have taken a home loan or you have taken a car loan, for example. Car loan company has given you 1 lakh rupees at the beginning of the year. Okay. On the opening balance, which is basically the loan amount that has been given by the car company to you, is the loan amount of 1 lakh that can I say you have utilized for the whole year from a facility standpoint, right? That 1 lakh worth of facility is what you have utilized the whole year. You have repaid 10,000 at the end of the year, but पूरा साल तो आपने 1 lakh use किया, right? Which means interest will be charged at 10%. Can I say on this amount? Right? This is how your interest will get charged. Now, same question is for depreciation and fixed asset. You have an asset block at the beginning of your year one. That asset block you have utilized for the whole year, right? Then you came to end of the year and now you are going to charge depreciation. So depreciation will be charged on opening balance or the closing WDV is my question. Now you tell me. Obviously on the opening balance, right? Okay? This is the example that I have used to explain what I'm trying to tell you. Now, coming back to this. When I looked at, this is the okay, this is I have created a schedule. The schedule was there. You could understand the numbers easily. This is fine. When you look at financial statements like this, you directly have yearly figures. You have the depreciation charge, which is in profit and loss. You have this depreciation. 7 crores worth of depreciation is there here. This depreciation, using this depreciation number, if I want to understand what is the rate of depreciation, can I say this 7 crores should be compared to the opening balance of fixed assets, right? And can I say the opening balance of fixed assets of that year will be nothing but the closing balance of the previous year? Correct? So this 80 is what you will use to understand what will be the rate of depreciation, is what I'm trying to speak about. All right. So the formula for calculating the rate of depreciation will be E44, which is this, divided by not E61, but D61, right? You need to take the opening balance of assets. And similarly, you will calculate for the opening balance of loans also. All right. So that's how you get the depreciation rate. Done, guys? Are you through with the depreciation part? Then coming to finance cost. Finance cost may again, you need to have a same thought process. The amount of money that I have taken from the bank at the beginning of the year is what I have utilized for the whole year. And assuming that the repayment, if at all it has happened, whatever amount will be happening at the end of the year, I need to calculate the interest cost on the opening balance, right? That is what we are trying to look at. So the interest number, which is this finance cost, will be divided over the short term and long term debt both. Just ensure you consider both. So this is the long term borrowing and plus this is the short term borrowing. All right. Shubham, what you're saying is absolutely correct. Generally, no depreciation. So your CWIP and IAUD is nothing but something that will eventually become part of fixed assets. It's just an accounting line item to be differently shown. That's how it is. So what you're saying is absolutely correct. So when you have additions or deletions during the year, the specific amount of percentage needs to be understood for that class of asset as to what is the rate at which that class of asset will get depreciated at. And based on that, the entire fixed asset schedule will be prepared on an asset-wise basis for you to understand what will be the relevant depreciation amount that will be applicable for the entire year. Right, Yamini? Padam Jain, same. The answer is very similar to your question as well. My bad. I was supposed to take opening borrowings. मैंने गलती से closing borrowings ले लिया. Varsha, thank you so much for pointing that out. Yeah, I stand corrected here. I spoke about the opening balances and then ultimately I myself took the closing balance, which is incorrect. So that needs to be corrected. In case any of you all just followed what I did, please get that piece corrected. We should all thank Varsha for pointing that out. Okay. Looks like a few people have some doubt on the finance cost piece again. So let me try and explain that finance cost wala wapas. Okay. So I took this particular example. See, the thought process is very simple. The thought process is very simple. You have loan taken at the beginning of the year for 1 lakh. Okay. Now you have repaid 10,000 at the end of the year, which means, can I say, the loan that you have utilized is for the whole year as 1 lakh amount. The loan that you've utilized for the I would say the loan facility that you have utilized for the entire year, can I say, is 1 lakh, right? So that 1 lakh is the number on which your interest for this particular year should get calculated. Okay. Which essentially means when I look at the P&L and the balance sheet, in the balance sheet, I will have the closing balance of loan, which is after any possible repayments that must have happened, right? For all the people who have asked me to repeat the finance cost again, Namrata, Azhar, and all the other people as well, Devendra, Shreya, Nilofar, for all you people, my thought process says like this, that the interest amount of 10,000 that you will see in the profit and loss statement is charged for the year. Okay. And the balance sheet amount for loan that you will see is the closing balance after repayment, which means that the charge for the year, which will be 9,000 on this case, cannot be calculated as a percentage of 80,000, because 80,000 is not the amount that I have utilized for this full year, right? Which means I need to capture this as a percentage of the opening loan balance, because मेरा जो opening balance था, उस opening balance के amount की facility को मैंने पूरा साल use किया, and at the end of the year, which is on 31st March or 31st December, whatever you must be considering, is when you repaid to the extent of 10,000 and how your balance closing 80,000 remains, right? So that is what gives you close to 10%. Right, guys? All the people who asked me to repeat this again, is this now clear? If loan is getting repaid in mid-year, तो आप mid-year के हिसाब से consider करो. It's absolutely fine. In this case, we are trying to consider it as a closing repayment for the ease of understanding. See, let's understand few things. While we are learning something for the very first time, I cannot involve an extravagantly high amount of complexity in every line item, right? Because we are first understanding the whole process also. In the process, if in specific line items, the complexity keeps on increasing, a lot of people might feel demotivated. So that's the whole purpose of how we are moving the way in which we are moving. Yeah. Perfect. Anish, what you're saying is absolutely correct. Right, guys? So that's about the finance cost. Again, in case of taxes also, whatever tax is paid in the history is absolutely irrelevant, because tax rates keep changing or keep updating themselves basis the budget which will come after 2 to 3 days, right? उस budget के हिसाब से tax rate हर साल change होते रहता है. So whenever you are building up a financial model, at that point of time, whatever relevant tax rate is applicable for a company is what you will consider directly for the directly for the explicit forecast period. You don't need to worry about what are the taxes that the company has paid in the past. It's absolutely irrelevant, right, guys? So we will directly take taxes in the future. All right. That's how it is. Then coming to balance sheet assumptions. Okay. One quick check with each one of you. Is everybody with me till the P&L assumptions for the historical period? Okay, let me spend 2 to 3 minutes here. There are a few people who have some challenges. Please let me know what your challenge is. I will solve them for you. No problem. Rakshika, your finance cost is coming 0. What you need to do is, you need to press the shortcut Control-Shift-5. Control-Shift-5 press karo ek saath, all the 3 keys, you will get it in percentage. Tax mein I have not yet done anything yet. I will explain when we do it in the explicit forecast period. Taxes, as I said, अब तक हमने कुछ नहीं किया. I will explain when we move to the explicit forecast period. So don't worry. Yeah. Depreciation, it's a non-cash expense, absolutely, but you will certainly have it deducted from the profit and loss statement. You will certainly have it deducted from the taxation standpoint also, because it's a tax deductible expenditure, right? So it is important both from an accounting standpoint and from a decision-making standpoint also, right, Soumya? -1 is done for you to calculate growth. Excel में आप जब calculation करते हो, this is the way in which you calculate growth. Abhilash, you are getting EBITDA 0. You need to press the shortcut Control-Shift-5 together, or you simply need to use this percentage sign here. वो आपका number में आ गया इसलिए वो 0 आ रहा है. आप percentage sign use करो यहाँ से. You should absolutely be able to get it. Parinita, you need to recheck your employee cost calculation. Perhaps there is some problem in the calculation, which is why you're getting 13%. Extraordinary and exceptional items, Maurya, for the explicit forecast period are again absolutely irrelevant. Decimal to percentage is Control Shift 5. Meghna, not all the three balance sheets, it's all the three statements. So profit and loss, balance sheet, and cash flow. And while we pass through the entire process, you will very clearly be able to understand what we've done. EBITDA. Okay, let's understand what is EBITDA. EBITDA is earnings before interest, taxes, depreciation, amortization. Okay, let's understand why this is important. See what used to happen. I'll tell you what used to happen earlier and what still continues to happen at a lot of places as well. 1 second. Yeah. Look at this profit and loss statement. Okay, look at this profit and loss statement, and let's understand what is the importance of EBITDA also, so that you guys get a perspective. As a retail investor matlab main, aap, hum sab, right? All of us are retail investor, common layman public. As retail investors, when we go up and check for numbers in the stock market for companies, we directly look at simple businessman mindset. कि profit कितना हुआ. This is the simple thought process that any businessman would have, right? In this case, if I directly look at the profit after taxes of this particular company, it gives me an X percentage margin. Now, this X percentage margin might not be similar across all the sectors, right? For example, FMCG में आपको एक 10% मिल रहा है. For example, pharma में आपको 15% मिल रहा है, कहीं पे 5% मिल रहा है, कहीं पे 6% मिल रहा है, कहीं पे 20% मिल रहा है. All these different kind of percentages would exist. But the profit after tax of different companies are not comparable to each other, because all these companies have different ways in which they are financing their business, they are running their business, right? There are discretionary spends that companies can buy themselves do. For example, some companies have incurred heavy amount on capital expenditure, right? For example, if Parle-G manufacturing company, अब Parle-G का बिस्किट मैन्युफैक्चर करने के लिए उनको 200 करोड़ का प्लांट सेटअप करना पड़ा कहीं पे, फॉर एग्जांपल उनको मशीन्स लानी पड़ी, उनको फर्नीचर लाना पड़ा. Let's say that is an example. Now, as against this, if I consider IT company will not necessarily have that much amount of capital expenditure, right? So this is a discretionary spend which depends upon different businesses. On business to business, case to case basis, it will differ. So your capital expenditure, जिसके वजह से आपका depreciation P&L में number आता है, is a discretionary spend. Second thing is taxes. Why we are again looking at taxes? Taxes maybe there are different ways in which companies get taxed as well. Okay, so some companies are allowed accelerated depreciation, some companies are allowed tax holidays for a few years, some companies might pay taxation at a marginal rate, some companies might pay taxation at a beneficial rate. Again, for all these reasons, the profit after tax figure thus becomes non-comparable, right? तो ठीक है, तो profit after tax से tax निकालो तो हम पहुंचे profit before tax भी. Okay, now let's see if profit before tax is comparable. No, profit before tax is also not comparable, because depreciation is a number which is again a discretionary spend, so that also needs to be removed. So then let's check what is the other line item which still remains. Then interest cost. Is interest supposed to be comparable across companies? Absolutely not. Higher the capital expenditure, it's quite possible that you might not be able to finance your business always using your own money, which is equity money, right? So it's quite possible you will go to the bank, you will take a loan. If you have taken a loan, your interest cost will be higher. So interest cost across different companies again is not similar. It is again a discretionary spend, because the way in which you choose to finance your business, the way in which you choose to run the business in terms of building up on the asset block by incurring heavily on the capital expenditure is what will ultimately determine what is the sort of interest cost that you will have. So interest के वजह से भी problem होता है, which is why what everybody said that let's use a metric which can give me some stabilized source of comparison across all the companies, which is why people directly look at the EBITDA margin Because EBITDA margin is what reflects the cash profitability of a specific business. Again, if you ask me, sir, ये इंडस्ट्री में इतना EBITDA मार्जिन होता है, वो उस इंडस्ट्री के इतना EBITDA मार्जिन से कंपेरेबल है, from a business sense it is not comparable, but from directly reading the financial statement standpoint, the objective of calculation is very much comparable, right? Which is why you calculate earnings before interest. Why before interest? Because interest is a discretionary spend. Before taxes. Why taxes? Because companies get taxed differently. Different companies get taxed differently. Before depreciation and amortization. Why before depreciation and amortization? For the reasons that I just spoke about a while back, right? So this is the whole thought process behind EBITDA, right? I hope that is a fairly clear explanation of what EBITDA is. Is each one of you with me from the understanding of EBITDA standpoint till this stage? What is depreciation for a fixed asset is amortization for intangible asset. Simple. वैसा है. ठीक है सर, बड़े आगे. Can we move to balance sheet assumptions? With your permission, each one of you. Tax, I have not done anything yet, Shreyashil, so don't worry. I will explain it when we come to the explicit forecast period, okay? ठीक है, चलो, perfect. Now coming to balance sheet assumptions. Now, Vikram, amortization is what is depreciation to fixed asset is amortization to intangible asset. It's as simple as that. EBITDA will not include expense. नहीं, other expense तो हमने remove कर लिया ना यहाँ पे. ये देखो, other expense remove हो जाने के बाद ही EBITDA calculate हो रहा है. After other expense has been removed is when EBITDA gets calculated, right? We are calculating the cash profitability in percentage terms, Lina Shri. So what we are trying to understand is, Lina, that what percentage of my revenue is the EBITDA that I am being able to generate as a business owner. Okay. Then coming to the balance sheet assumptions. In balance sheet assumptions, we will start with 4 categories of working capital line items, which will have a days calculation. Okay, there are 4 specific line items where you need to calculate days. What is that days? What does that mean? I will explain everything, so don't worry. Right now, just understand what are the line items that we will deal with. Okay, then you have the capital expenditure assumption and then the debt assumption. Barabar? Capital expenditure assumption is what? Basically, what we are looking at in terms of how the business is going to expand. For example, if Parle-G company has 200 crore ka revenue this year and next year it wants to go to 300 crores directly or directly 400 crores, they will be able to do it only if they spend a heavy amount on the capital expenditure by, say, bringing a total new innovation in the way in which they are doing business, based on which the production capacity will increase, based on which the revenue growth will happen. So that's the capital expenditure that we might look at. And then comes the debt assumption. Debt assumption is basically, debt assumption is a combination of 2 things. One, my existing debt, how is it going to get repaid? That is one. Second is, how exactly am I going to finance my future capital expenditure, right? So that is what we'll be looking at in terms of balance sheet assumptions. So the first thing is inventory days, okay? The inventory days as a number, yeah, Devendra, what you're saying is 100% correct. You should look for EBITDA. That's far more important as compared to PAT. Yeah. So then coming to inventory days. In inventory days, what we are trying to understand is that in inventory days, the calculation and the relevant metric that will be used are the 2 important considerations. Okay. The relevant metric that ideally will get used in inventory is cost of goods sold. Okay. So which is why you can see E33 here. And the calculation will be on the basis of average inventory. Why average inventory? I'll tell you. And why averaging is not done in any other days calculation wale line item is what you need to understand here. In case of inventory, what happens is there are a lot of different methods, different ways in which inventories get valued across a lot of companies. For example, if you look at पार्ले जी कंपनी, ओके, पार्ले जी कंपनी में जितना ताजा होगा, so or rather I should give you a even more easier example for you to understand. Let's understand Vibs bread. Vibs bread या modern bread, कोई भी bread कंपनी ले लो, bread जितना ताजा होता है उतना we prefer, right? We prefer bread which is fresh, correct? So the normal way in which, the normal methodology in which inventory will get utilized in case of a bread business will be LIFO method. What is LIFO? It's last in first out. जो जितना ताजा है उसको फटाफट भेजो. नॉर्मली जो, अगर मैं आज ब्रेड लेने जाता हूं तो मैं आज की तारीख का ब्रेड लूंगा या कल की डेट का लूंगा या परसों की डेट का लूंगा. If I go out and purchase bread, I will buy it today's date or yesterday's or day before. I will try and make it a purchase of the most recent date, right, which is today's date. So it's last in first out. 2 दिन पहले वाला ब्रेड शायद ना भी बिके, पर आज के दिन का ब्रेड बिक जाएगा, right? So that's a LIFO method of accounting, LIFO method of inventory. As against that, there are other companies wherein you will have first in first out, right? For example, if you have a Parle-G biscuit packet, normally you will go for fresh biscuits only, but you have a fair amount of say 3 months, 6 months, 9 months, 12-month bracket within which you can play around with the inventory of a Parle-G biscuit, right? So that's LIFO method of accounting to an extent. So there are different methods in which inventories get accounted for, they are getting valued, which is why your inventory balance at the opening stage, at the closing stage, might not be very easily comparable across the actual situation which the company is running at from maintaining an inventory standpoint, right? So what you need to calculate is an average inventory, and that average inventory needs to be looked at as a days function of your COGS number. All right. So what you need to do for that is you will calculate the average of D70 to E70, which is this. That's my inventory number, right? And I will divide it over COGS. Now let's go slow. When you divide it over COGS, let's understand why we are multiplying by 365 also, so that you get a perspective. Okay. See, what happens is when I look at inventory calculation, average inventory divided by COGS, my inventory, in fact, rather not my inventory, my entire balance sheet line item. Please understand the two fundamental differences between profit and loss. In fact, there's just one fundamental difference between these two statements, which is profit and loss and balance sheet. Your profit and loss statement is for the entire year. पूरे साल में कितना revenue हुआ? पूरे साल में what is the employee cost? In the entire year, what is the depreciation? Entire year में what are my other expenses? Profit and loss statement is a statement for the whole year. Your balance sheet is as at a particular day. 31st March 2023 के दिन पे हमारी बैलेंस शीट की ये पोजीशन थी. On 31st December 2022, this is what my position of my assets and liabilities was. Balance sheet is not for the year. Please understand. This is a fundamental difference that every one of you should be aware of. To build on this further, when I perform this particular calculation, okay, average of stock divided by COGS, I get a number which reflects the inventory of that specific day. 31st March so and so को इतनी inventory थी. But I need to understand from a forecasting standpoint that what is the average inventory balance that I will maintain from a days function standpoint for the entire year, which is why I multiplied by 365. Right? So this is the whole reason of multiplying by 365. Chalo, let me know what is your inventory days coming to. We divided by CO. Okay, so for inventory, the relevant metric is cost of goods sold. What will inventory basically comprise of? Your inventory is going to comprise of raw material, work in progress, and finished goods, right? And if at all you have, say, there is a small element of trading business also, you will have a stock in trade. All of these put together, okay, for all the people who are telling me that inventory, the relevant metric should not be COGS, but it should be revenue. Let me challenge you and you will understand where I'm coming from. The amount of cost that you have spent on inventory will be reflected in the inventory balance. My question to all of you, for all the people who are asking me why COGS, why not revenue, the amount of cost that you will incur on your specific inventory will be the cost that is reflected in the inventory balance in the balance sheet. Everybody agrees? Everybody agrees? Yeah. So that cost will come from cost of goods sold, or you will also include the profit element to it, which will be reflected in the revenue. When you look at revenue, revenue includes your cost of goods sold plus the profit element also. But your inventory cannot have a profit element, right? Which is why you need to use COGS. Okay. Yogesh, closing stock nahi lena chahiye. You should consider average inventory. That's the whole discussion about. All right. So that's about the averaging out. Again, because for averaging, I need 2 years figures, the opening and closing balance. I cannot perform that calculation for the year one. All right. Then coming to trade receivable. Trade receivable is a very simple thought process. I have sold 10 rupees worth of Parle-G biscuit to a customer. Customer needs to give me 10 rupees. There is no question of I will have different ways of accounting for my receivables and different ways of calculating my debtor balance. All of that is not going to come. It's a very simple, straightforward thought process. 10 rupees ka mal becha, 10 rupiya collect karo. As simple as that, right? Which is why your receivable will be a function of sales, right? Everybody agrees? Perform that calculation and let me know what's your days of receivable coming to. So 40 divided by revenue into 365. I'm getting approximately 73 days. Inventory will include raw material stock also, yes. In case of service industry, it will not be cost of goods sold, it will be cost of sales. And the cost of sales will typically be the team's cost. Service industry may typically team. For example, I am a chartered accountant. I run a transaction advisory business myself. In our case, what will be the situation that, for example, if I have billed 1 lakh rupee to my client for the services that we have given to them, the amount of time that we have spent on that particular assignment, based on that, X proportion of our salary cost or our professional fees cost will get calculated. And that number is what essentially becomes the cost of sales of that 1 lakh worth of service, right? No, so Payal, inventory and receivable, both the days should be as low as possible. Yeah, all direct costs associated with the provision of service will become part of cost of sales. No, Geet, there's no specific ideal number as such. All right. Then coming to trade payables. Trade payables will be a proportion of again COGS. Okay. Ideally, trade payables, if I look at it from a raw material standpoint, it should have a proportion of purchases of raw material. But in this case, we have a combined number, which is why we will directly use the COGS. When you look at the PNL and balance sheet that you will get in this format from Money Control, Google Finance, Yahoo Finance, BSC, NSC, whichever website you go ahead and pick up information for any listed company, you will not have information very clearly available about what is the purchases of raw material, right? Utna specific information nahi mil payega aapko, which is why you used a larger metric, which is COGS, right? So you will be using that trade payable as a COGS function again here. So that's my trade payable balance or DAD5 and over COGS into 365. So I am getting approximately 51, 52 days के करीब आ रहा है मेरा trade payables. What are you guys getting? All operating expenditure cannot be equated to cost of goods sold in case of service industry, Parvati. You need to have the team's cost, which is a direct expense of providing the service, should be equated to COGS. For example, you have, as I said, you are running, say, a chartered accountancy practice, and you have sold services worth 1 lakh. All the time that you have spent, yourself and your team has spent, should be calculated as cost of goods sold. Rather, I should say cost of sales, more appropriately. As against that, your operating cost also includes your office rent. Office rent is also operating cost, but that is not COS. That's not cost of sales, right? Right, Parvati? All right. Then coming to other current liabilities. Other current liabilities, acha, let's understand which are the typical line items which will be part of other current liabilities. You will have salary payable. Ab line item bolo. Chalo, I want to hear it from you guys. According to you, what will be the typical line items in other current liabilities? Swati, yes. Cost of goods sold, cost of sales is one and the same thing. Okay. कोई बोल रहा है rent payable. Okay. Yes. Point taken. Salary payable. Okay. Point taken. Okay. Unnati is saying basically all the expenses payable. Okay. Understood. All right. Okay. Perfect. Interest payable एक तरीके से हाँ ठीक है, उस तरीके से भी आप समझ सकते हो. That's okay. Vendor payments will be part of trade payables. Salary payable, outstanding expenses, food expenses. Okay. Perfect. Okay. So basically, can I say in a nutshell, other current liabilities is nothing but some or the other operating expenditure payable in a nutshell, right? So for other current liabilities, then can I say the relevant metric would be the operating expenditure of the company, right? Which is what we'll be doing. So you have other current liabilities, which is this. Sorry, ये short term provision आ गया, क्या आया? हाँ नहीं, other current liabilities, and you will divide it by, can I say the total expenses, right? And multiply by 365. Close to 44, 45 के आसपास is what I'm getting. Yeah, so once the purpose of calculating other current liabilities as a days function and trying to understand it also as a number is only because I don't want it to be calculated as a balancing figure like quite a lot of people do, because that's not the right way to look at it. So we are trying to calculate that also as a days function. So your inventory days and trade receivable days should be as low as possible. Your trade payables and other current liabilities days should be as high as possible. Right, Sarita? Then coming to the capital expenditure assumption. Okay. Capital expenditure में my question to you is, and you have to tell me whether I am doing this correctly or no. Okay. When I look at my fixed asset balance, and let's calculate it from year 3 just for the sake of understanding. When I look at the fixed asset balance, I had 70 crores worth of fixed assets in second year, at the end of second year. From 70 crores, I have become 80 crores in the next year. I am saying the capital expenditure is 10 crores. Is it correct? बोलो, correct है कि नहीं? It's not correct because can I say this 80? Can I say because this 80 is reduced to the extent of depreciation, right? Can I say this 80 is already a reduced figure to the extent of depreciation of this particular year? And depreciation is non-cash. So can I say that impact needs to be reversed, right? Which is what we need to do. So I need to reduce the impact of this year's depreciation, which is this. And I will get an approximate capital expenditure of close to 70. Yeah. Is each one of you with me till this stage? Then coming to the debt assumption. Okay. Acha, theek hai. There are a lot of people who have asked me to repeat capital expenditure, so let me explain that again. Let me take this example. Okay. Opening balance, add additions, less sale, less depreciation, closing balance. ठीक है? 1 lakh, add addition 10,000, less sale एक बार I am considering 0. Okay. Add additions of let's say 10,000 every year. Depreciation, let's consider 9%. Additions we are assuming at the end of the year for the sake of understanding. Okay. Less depreciation. So opening balance multiplied by this. That gives me this plus this minus this minus this. Even if none of you all are understanding what I'm doing, it's absolutely okay. Don't worry. I will explain everything. Now, let's understand what I'm trying to tell you. Okay. This is year. All right. Now, at the beginning of the year, I had an opening balance of 1 lakh. Okay. I have added a few assets this year to the extent of 10,000. And this additions to the extent of 10,000 has happened at the end of the year. Okay. There is no sale of asset. So I have just given a number 0 across. And you have a 9% depreciation. Now, all of you have understood why depreciation will be calculated only on the opening balance. Right? Has everybody understood why depreciation is calculated only on the opening balance? Because addition is made at the end of the year. Correct? Is everyone with me till this stage? This is question to specifically those people who have asked me to repeat myself again for depreciation. तो मैं आपसे पूछ रहा हूँ. Is this fine? Perfect? हाँ. Now, coming to closing balance. Can I say closing balance will be nothing but opening balance plus addition, less depreciation, right? So the calculation is also correct. Now, what will happen when you look at balance sheet? When you look, I'm so sorry. When you look at a balance sheet, right, you will directly have these numbers. When you look at balance sheet, you will directly have this number. And if you try to calculate additions like this, okay, this year I had 101. This year I have 101910, which means I have made an addition of 910 rupees. Is that the right way to calculate it? Have you made an addition of only 910? No, right? Which means you need to reverse the impact of depreciation. Correct? So for that, what you will do is you will reduce depreciation further to reach to a number which is 10,000 and which will stand true in all the case. So this is equal to this. Right? This is how you get additions. And what is additions? Additions is nothing but capex. Capex, the word capex is a short form of capital expenditure. Okay. Now, everyone who had a challenge in understanding, now is this fairly clear? CWIP is not part of this. CWIP is an accounting adjustment. It's irrelevant from understanding the capex standpoint. For all the people who had asked me to repeat, is this fine now? Yeah. Okay. So this is what happens in your capex assumption. Then coming to debt assumption. In debt assumption, as I told you, debt assumption for the future will be a combination of two things: existing debt repayment and future debt intake. Okay. In our case, what we need to do is first look at what has been the historical repayment pattern, right? For which what we will do, we will pick up both the numbers in your short-term and long-term borrowing and try to check what is exactly happening. Okay. So my long-term borrowings is this. Long-term borrowings, which was 12 last year, has become 10 this year. So can I say it's a repayment of 2? My balance of 12 last year has become 10 this year. Can I say it's a repayment of 2? Right? Plus, I will see what is the repayment in short-term borrowing. So short-term borrowing, as such, there's no repayment. They are continuously utilizing their OD facility. Looks like that. So I'm getting an approximate repayment of close to 2 crores every year. Okay. No, Shubham, that's incorrect. उससे नंबर सही नहीं आएगा. See, either you do D minus E or E minus D, ultimately your amount should be correct, right? See, let's understand this. In financial modeling, whether you do D minus E or E minus D, it's absolutely irrelevant. The sign is also, I'll tell you how the sign also becomes irrelevant, because when I look at capital expenditure is a cash outflow. So when I want to show a cash outflow, I will prefer showing it as a negative sign. Right? So that negative sign is what is getting reflected in the signs that you are looking on the screen. Right, Manan? Are you with me till here? Yeah, Shritima, we will be making a debt schedule for the futuristic period as well, as you rightly said. Yeah, Sagar, based on everybody's suggestion, we have changed the chat settings to myself only. So I can chat with you all and you will not be disturbed by a lot of messages because that was a suggestion that somebody gave. Yeah. So +3 year represents that there has been an asset sale in that year, Yamini. +3, when you look at this number as a +3, it represents that the asset was sold in this particular year. And -17 means this is the capital expenditure that has been incurred in this year. Right? Okay. So that takes care of our profit and loss and balance sheet trend analysis standpoint. Okay. Now we are moving forward to utilizing the trend that we have understood from the past for the future. All right. Chalo. Let's get started. Is each one of you with me till this point? Can we move forward? We have understood what has the company done so far. Now we are going to utilize that knowledge, that information going forward. Sure, Vansh. Thanks for understanding that and appreciate your patience as well. Okay, for all the people who could not understand the debt assumption, it's absolutely fine. When in the explicit forecast period, I'll be explaining it in the balance sheet piece. I will take it up again. All right. Chalo. Let's do it. Let's do it. Let's do it. First thing is the revenue growth. Now, I'm going to make a statement and you guys have to acknowledge it whether you believe equally in that statement or no. Okay. I'm going to make a statement. The statement is that a company passes through various stages in its life cycle. Do you agree? The various stages in the life cycle of a company that we have studied when we were Baba level, right, is launch, growth, maturity, decline, that aisa wala curve. Do you guys recall that? These are the different stages within which a company passes through in its life cycle. Everyone with me till here? Now is the statement that you guys need to acknowledge, and I need to understand whether you all have understood or not. When I look at this particular company, it looks like this company is in its stable growth period. When I look at this particular company, it looks like this company is in its stable growth period. Yeah. When I look at the stable growth period of this particular company, can I say it looks like that in the near future, this company will reach to its matured stage in the life cycle? Can we say this company might reach in the matured stage in its life cycle in the near future? Right now, this is what you all have understood, you all have also acknowledged. So it gives me a fair sense of whether you will be able to understand what I'm going to speak about next. Okay, let's understand this. When this particular company looks like it's a 17%, 17%, 17% stable kind of a growth rate in the past, it can be assumed that going forward, it is quite possibly going to reach a matured stage in its life cycle. Okay. And in any given financial modeling exercise. And so to say for example, if you are utilizing the same model so created for probably say evaluation exercise also going forward, let's say शायद हमने यही model use कर दिया. It is an inherent assumption in any given financial modeling exercise that a company A passes through various stages in its life cycle, like I said, and by the end of the explicit forecast period, which is basically the latter half of the explicit forecast period, year 4 or year 5, the company will reach to a matured stage in its life cycle, beyond which it will continue to grow at a single digit growth percentage going forward. Okay. And that single digit growth percentage rate that I am talking about in finance and in valuation terminologies is called the perpetual growth rate or the terminal growth rate. Okay. That perpetual growth rate or that terminal growth rate for companies in India being a developing economy, is well within the range of 3 to 5%. Okay, this is an industry insight that I'm sharing with each one of you. That percentage growth rate is 3 to 5% for companies in India being a developing economy. Now, whatever I'm going to speak about, listen to me very closely. India being a developing economy, 3 to 5% perpetual growth rate is considered reasonable. As against that, if this was supposed to be, say, a company in the United States, a perpetual growth rate of 2% or say at max 3% would have been considered reasonable, because US is already a developed economy. There is limited scope for further development. As compared to that, if this was a company, say in Bangladesh, a perpetual growth rate of 6% or even up to 8% would have been considered reasonable, because it is an underdeveloped economy wherein there is further scope for development. Right? So for companies in India being a developing economy, when I'm looking at a 3 to 5% perpetual growth rate, on the higher side, let's consider I am picking up a 5% rate for the sake of understanding. You tell me I have a 17% historical year 4 rate, which is the growth rate. I have to reach to a 5% growth rate after the explicit forecast period, which is after forecasted year 5. You tell me, can I have a 17%, 17%, 17%, 17%, 17% wala growth rate for the next 5 years? Can I have that kind of a growth rate? Absolutely not, right? Which brings me to my next thought process. And I would request you all to acknowledge it as well, that I need to pick up numbers that show a declining trend and they reach to a specific number in the year 5, basis which I can consider a 5% growth rate forever as reasonable. Right? Do you guys agree? For me to be able to justify a 5% perpetual growth rate going forward, I need to have growth percentages declining to an extent that this seems reasonable. Right? So from 17, if I have to reach to 5, that gives me a difference of 12. 12 divided by a 5-year period gives me an approximate rate of say maybe 2%. So I can have a reducing trend of 2% like this, as G7, the 17% of G12 minus 2% is what I will pick up here and consider that going forward. Right, guys? This is the thought process for revenue growth percentage of the explicit forecast period. Now is when the business logic of entrepreneur, if you recall, when we began this session, I had given you a business logic of entrepreneur wala PowerPoint presentation, right? That logic of each and every line item is what we are going to be looking at here. Okay. Now, for all the people who are asking me to repeat, I'm going to repeat this again. Hear me out very closely. I understand this is important. Okay. For all the people who have asked me to repeat, have you at least understood and have you at least been able to acknowledge the fact that the company is looked looking like it's in a stable growth period? Now I'm asking to those people who have asked me to repeat. तो उन सबको जवाब देना पड़ेगा. Looks like it's in a stable growth period, right? For any given financial modeling exercise, explicit forecast period में से आप explicit word निकाल दो. अगर वो word से अगर समझने में दिक्कत आ रही है, you remove that word. You just consider it to be a forecast period. Explicit forecast period, it's just terminology that I'm explicitly forecasting what could be the possible business of my company going forward. That's the only thing. Baki the word has nothing, no role to play. So don't worry. All right. So when I have a stable growth rate of 17% in the past, and now it's quite possible that as a business, I might reach to a matured stage in my life cycle, beyond which I will not be able to grow at an ever increasing growth percentage. And the growth percentage would be fairly reasonable in the range of 3 to 5%. So for me to be able to justify a 5% growth rate after the explicit forecast period of 5 years, I will have to have a reducing growth rate trend of my revenue. And let's understand the difference between two things. One, the revenue is not reducing. The revenue is not reducing. Please understand very carefully. This is not a reduction in the revenue. This is a reduction in the growth percentage in which the revenue is going to grow. These are two different things. I hope everybody is able to understand what I'm talking about. रेवेन्यू की ग्रोथ परसेंटेज डिक्रीज होना एक अलग चीज है और रेवेन्यू की परसेंटेज डिक्रीज होना एक अलग चीज है. प्लीज अंडरस्टैंड दिस. These are two different things. Yeah. So for us to be able to have for us to be able to have a reasonable 5% after explicit forecast period, I need to tone down the revenue growth rate to the extent that it reaches a reasonable number, which is say close to 10%. 10% तक भी अगर आप यहाँ पे आ जाते हो, it's absolutely fine. You can consider either 2% reduction. You can consider even say up 1.5% reduction भी करना चाहो, it's absolutely fine, right? Growth rate will differ business sector wise, absolutely. Yes. Yes, Manan, Jagan, what you all are saying is absolutely correct. Okay. So that's about the revenue growth assumption. Now my question to all of you, how many of you have heard about the concept of economies of scale? You all have heard about economies of scale? Let me give you an example. Let me give you a very, very live example. Okay. Let me give you a very, very live example. अभी हम लोग कितने लोग हैं कॉल में? 410 लोग. ठीक है? For Pranav to conduct a financial modeling workshop at 7 p.m. on 28th January 2023 with 500 people on a Zoom call live. Let's say the cost of this conduct of workshop is 2000 rupees for 500 people. अभी 500 की जगह अगर 600 लोग आए, as against 500 people, if I get 600 people, my cost will still remain 2000. If it is 700 people, cost is still 2000. If it becomes 800 people, my cost might increase to 2300 or 2400. It will not significantly increase, which means the rate at which your revenue is going to grow, as against that, the rate at which your cost is going to grow will always be different, which effectively means that you will have a reduction in the way in which you will have a cost optimization in the way in which you will be running your business, and hence your overall cost will start optimizing, right? Which means your 55% going forward might not remain 55%. You can consider a nominal 0.5 or 1% kind of a reduction going forward, right? So I'm just picking up a number which is say 0.5% reduction going forward. There is no specific guidance to why 0.5%, why 1%, why 2%, why 5%. You have to use your business logic of entrepreneur. You have to use that own logic. See, nobody is going to question you. Why have you taken 0.5%? 0.5% is bare minimum. Itna to cost optimization hoga hi. Otherwise, why exactly are you running a business, right? Yes, Shritima, please go ahead with your doubt. Yeah, Devendra, what you're saying is 100% correct. Then coming to the employee cost. Okay. Now, employee cost mein, company has given 10% escalation in the past. It is very clearly evident. So this is not a number that we need to sit and negotiate on. If company is giving 10% increment only, you cannot challenge it. All right. So let's consider a 10% number going forward as well. And the kind of revenue growth that is going to happen in the future also does not reflect a lot of requirement of human capital. Please understand. For example, 10% is not just कि जितने employee थे उन सबको 10% increment दिया. That's not the way to look at it. Your 10% includes the salary cost increase also, plus people who have left the organization also, plus people have joined new in the organization also. All of that put together is giving you a 10% increase. So you can consider it to be a stable number going forward as well. No, Bhavna, it will not be higher. It will not be higher. It will start optimizing. तो यहाँ पे तो आपको डायरेक्टली इक्वल टू करके 10% करना है बाजू वाला. सिंपल. You just need to have that number in place. Then coming to explicit forecast period other expenses. Okay, what you need to write here is balance net of EBITDA. What is balance net of EBITDA? I will explain when we come to the profit and loss section. Okay, so don't worry about that at this stage. Concept of economies of scale, Arzu, is very simple. Let's understand that we have 400 people on this call live right now. If for 400 people, for me to take up a live session on Saturday evening at 7 p.m. for 400 people, if I have to spend 500 rupees, for example, okay, as against that, if say 500 people come in, my cost will still be 500. If 600 people come in, my cost will grow at say 550 at max. Okay, so the incremental cost of being able to achieve a higher number in the revenue will always effectively be lower, right? So that is the whole reason why your effective cost optimization will start running around in the system, and that's how your economies of scale will get achieved. Right, Asu? Kalyani, I hope I've answered your question as well. COGS, that was the same explanation. Lakshmi, no problem. You will get the recorded version of this call. Don't worry. Saurabh, I have explained the COGS forecasting. I hope this is clear now. Formula in COGS, I just have to reduce a 0.5% reduction. Simple. Then coming to EBITDA margin. When I look at these 4 years rather, I get an average of 16%. Okay, I am getting an average of 16%. As a business owner, my bare minimum on the most conservative side, okay, on the most conservative side, when I look at these numbers, can I say my bare minimum target should be 15%? On the most conservative side, can I say my bare minimum target should be at least 15%. That is what we have considered. Then depreciation and finance cost are not numbers that you need to give a lot of thought to, and I'll tell you why. Depreciation is the number that you need to consider as the latest available information, because that depreciation rate is reflective of the kind of asset block that you have right now on which the depreciation is getting charged, right? And similarly applies to finance cost. For example, आप खुद सोचो, if you have gone to purchase a flat, a house, you have gone to purchase a car, and last year you were getting a 7% rate. Can you tell the banker, you give me 9% rate which was applicable 2 years ago? Can you tell the banker, you give me a loan at 9%, which was a rate which was applicable 2 years ago? Absolutely not, right? The bankers will at best negotiate with you what is reflective in the current market situation, right? So it is a wise assumption to consider the latest available information for going forward explicit forecast period as well. See, let's understand. Right now, we are building up a hypothetical company because we are learning academically how a financial model from a process standpoint needs to be built. Okay. In the real world, you will have a very clear sanction letter, a very clear loan facility sanction letter, which speaks about the rate of interest, the repayment, how exactly the entire repayment schedule is built. Everything will be very clear. At this stage, we are trying to academically learn a few things for the first time, right? So that's the way in which we are picking up things. Then coming to taxes. For taxes, there is a beneficial income tax rate of 22% which is available. It is given by Nirmala Sitharaman ji. That is the tax rate that we are assuming that this company will be able to avail the benefit of. In Income Tax Act, there are a few specific conditions that have been mentioned, that if the company follows this condition, then the company can use a beneficial tax rate of 22%. We are assuming this company is eligible for that, and that's why we are considering a 22% base corporate tax rate. On this 22% tax rate, you will have a 10% surcharge. Okay, you will have a 10% surcharge. So you do into 1.1. And over and above that, you will have a 4% cess. Okay, so you will do into 1.04. And that's how you get your 25.17% to be precise. It's 25.168 approximately. Right, guys? Acha, chalo. Let me give all of you guys a little heads up so that you feel a lot more relaxed on what's happening and whether or not you will be able to remember, recall what is happening. Come rightwards on your Excel sheet. Right mein jao. Go rightwards. Go to column double A and AB. Come to column double A and AB. Each and every thought process, each and every line item, each and every logic, each and every business understanding, each and every reason, each and every formula that we have used in any of the assumptions is something that I have written down for your reference as part of this particular Excel spreadsheet itself. Okay. Column double A and column AB में आपके लिए मैंने सब कुछ ऑलरेडी लिख कर रखा है. So none of you need to worry about anything. As I said, whether you understand things or no, and how are you going to learn things is a question on my table. It is not your headache, it is my headache. Okay. So column AA and AB is where you can find all the necessary thought process, logic, business understanding, formula, reason, everything is written. Yeah. Will column AA and AB be useful to you guys? Do let me know in the chat. Right? So that's how the columns are going to be useful. All right. Then coming to balance sheet. Balance sheet पे आ जाओ चलो. Balance sheet assumption. For balance sheet assumptions for all the 4 days calculation, you don't need to apply any brain. Simply take average of all of it. Simple average. Simple average of all the numbers is what you will consider going forward. चारों के केस में एवरेज डालो. For all the 4 numbers, you have to simply consider average. There is no other way to take the day's number going forward. For the taxation, as I said, you have, chalo, let me write here, you have a 22% base corporate tax, 10% surcharge, and 4% cess. Right? And now we look at the formula. It's 22% into 1.1 because surcharge is charged on the 22%. Okay. And 4% is further charged on the tax plus surcharge. ऐसा. Excel sheet, acha, if you go to the WhatsApp group, let me do one thing. I have just shared the link right now in the chat box from where you can download the Excel sheet. Okay. I hope that should serve the purpose. Right. Then coming to capital expenditure assumption. Okay. See, in this case, in capital expenditure, there are 2 ways in which a capital expenditure line item needs to be thought about. One is growth capex, second is maintenance capex. Okay. When we look at growth capex, firstly, let's understand what is growth capex. When I look at a particular company, let's say my last year's revenue was 5 lakh. Okay. In the next year, from 5 lakh, I want to reach to 40 lakhs. That is the target. 5 lakh से सीधा 40 लाख का धंधा करना है. That is possible only if I bring about a total innovation in the way in which I am running my business, or I purchase new plant and machinery using which I increase my production capacity. And with that increased production capacity, I'll be able to manufacture and sell products worth of 40 lakhs. And that's how I'll be able to reach to the turnover of 40 lakhs. Okay? So any amount that you will incur on this kind of a capital expenditure, which is either, as I said, it's your new plant and machinery or innovation in the way in which you did business, will be termed as part of growth capex. बिजनेस में ग्रोथ करने के लिए इनकर किया हुआ कैपिटल एक्सपेंडिचर, राइट? दैट इज द ग्रोथ केपेक्स. Second is maintenance capex. Maintenance capex is basically the amount that you need to incur on your plant and machinery to maintain the existing production capacity, which is nothing but depreciation. More or less similar to depreciation. But the number, in terms of the actual number, the number should be a little above the depreciation number. All right. So this is what is growth capex, and this is what is maintenance capex. Now in this particular company, we can already see some amount of growth capex has been incurred in the past. Okay. And going forward also, the kind of revenue growth that we have considered does not show the requirement of growth capex as such. Do you guys agree to this? When a company is reaching a matured stage or towards reaching a matured stage in its life cycle, the company might not demand a lot of growth capital expenditure, right? Only maintenance capex should be good enough, correct? So what we are looking at right now is that the company will spend maintenance capex, which can be a little higher than the depreciation of the company. Okay. So let's see what has been the depreciation in the past of this particular company. It's around 7 crores, 8 crores ke aspas. So we can consider a 9 crores worth of maintenance capex going forward. All right. So that's where the capital expenditure assumption can come in. ये नहीं समझा, ठीक है, let's understand this. See, what happens is, for all the people who have asked me to repeat, have you at least understood conceptually what is growth capex and maintenance capex? My question to all the people who asked me to repeat, have you at least understood what is growth capex and maintenance capex? Okay. I have, as we said, we are running a Parle-G manufacturing business, right? Parle-G manufacturing business has last year's revenue of 10 lakhs. Okay. Next year, my revenue needs to go to 50 lakhs. That is my target. Now, for me to be able to, or 50 lakhs bhi chodo, you want to reach to 1 CR, 1 crore. 10 lakh se सीधा 1 crore का धंधा करना next year. Now, you can do that only if you incur an X amount in plant and machinery, using which you will increase your production capacity and be able to manufacture and sell 1 crore worth of Parle-G biscuits. Okay. So the amount of capital expenditure that you will spend on the plant and machinery will become part of growth capex. Growth capex is clear? Let's go step by step. For all the people who asked me to repeat, growth capex is clear till here? Okay, perfect. So that's growth capex. Then coming to maintenance capex. Maintenance capex is what? Basically the capital expenditure that you have incurred on repairs and maintenance, machine overhauling charges, all these terms you must have heard, for that existing production capacity maintenance. मतलब मेरी जो existing production capacity है, मेरी जो existing block of assets है, उन assets की production capacity को maintain करने के लिए किया हुआ खर्चा is what is maintenance capex. Now, normally maintenance capex is close to, it's typically depreciation जो charge हम दे रहे हैं, it's a non-cash expense, right? Why are we charging depreciation? Because that is the amount that reflects that my assets, to the extent of the amount of depreciation, are getting used every year, right? That is basically the maintenance capex that you are in some or the other way charging. This is concept. Have you all understood conceptually what is growth capex and maintenance capex first? Okay. Now the next question is, कि sir, number कैसे लूं मैं? Correct? How do I consider a number? So that number, as I said, it can be considered as a number in terms of maintenance capex. It can be considered a number which is close to your depreciation figure in the past, and it should be a little higher than depreciation, right? So you have 7 crores, 7 crores, 8 crores, 8 crores के आसपास depreciation है in the past. So you can consider an approximately 9 crores worth of maintenance capex going forward. Now this is clear. It should be higher than depreciation because otherwise what you're saying के मैं उतने का एसेट भी नहीं खरीद रहा हूं जितने का एसेट मैं ऑलरेडी एसेट ब्लॉक खत्म करते जा रहा हूं, right? That does not reflect a true business scenario. You will at least, basically, what is your depreciation amount? You are creating a provision for being able to replace the asset going forward, right? So utna to at least you should be able to consider in case of maintenance capex. So that's about the capital expenditure assumption. Then coming to debt assumption. Like I told you, debt assumption will be a combination of two things. If you look at the long-term borrowings, short-term borrowings is simple, straightforward. 6 crores worth of requirement is what they have every year. Okay. So this 6 will continue to remain same for the explicit forecast period also because that is their business requirement. Utna unko short-term working capital financing ki zarurat hai is what is getting reflected in the historical period. Okay. So what we need to focus on now is on the long-term borrowings. When you look at long-term borrowings, the long-term borrowings were 12, they became 10, became 8, became 6. So can I say 2 crore ka repayment dikh raha hai har saal, right? Now you tell me, at the end of historical year 4, I have 6 crores worth of long-term borrowing, existing debt. And I have a 2 crores worth of repayment. So this 6 crores worth of loan will get repaid in how many years? Can I say it will get repaid over a period of 3 years, right? So what I will do is, I will come here and I will say equal to, I will select the number 6 and divide it by 3. Okay. That gives me, and this has to be a repayment. So repayment is supposed to be negative. So you will give a minus sign, right? So this is first year, this is second year, this is third year, then I will have a 0. So that's how your existing debt will get fully repaid. Right, guys? Is each one of you with me? So what you need to do is, Rakshika and Aditi, you have a 6 crores worth of debt. Okay. You have a 6 crores worth of debt in the balance sheet. That needs to be repaid over the next 3 years in terms of 2 crores, 2 crores, 2 crores each, because historically we have seen that the company has been repaying 2 crores every year. Okay. So that is what we have done. Over the next 3 years, 6 crores get fully repaid and then you have nothing. It's as simple as that, right? All right. Chalo. So P&L assumption, balance sheet assumptions. P&L assumption, balance sheet assumption is fully done. Now we are going to use what we have assumed to actually forecast the profit and loss and the balance sheet statement. Guys, ab maza aana shuru hoga. Because till now, we were just getting ready with arms and ammunition and weapons. Now we are actually going to go on the battlefield and fight for the war. All right, chalo, let's get started. First thing is revenue growth. Okay, revenue growth, I have taken what? 15% approximately. How are you supposed to add growth to a particular year is what you need to see here first. Okay, what I will do is I will have 322, which is my last year ka number. On the last year number, I need to add a 15% growth. So I will multiply it by 1 plus 15%. That is how you add growth in Microsoft Excel. Okay. And then you will simply drag it across. While I perform all these functions, what I will do is in this column, okay, now you have to look at column M. Column M is formula FYR. I will keep writing the formula of every calculation that I have made. Okay, so this is the calculation that you need to make. Let me know in the chat box if your revenue number is coming correct. Do let me know. Right, guys? That's your revenue number. Now, COGS is calculated as a function of revenue. So what I will do revenue multiplied by the COGS percentage, which is this, and I will get the COGS numbers. This is the formula. Done, guys? Revenue minus COGS, that gives you the gross profit. No, so once it's not 9%, it's 7%. It has a 7% number here. Acha, one more thing. In case any of you get a number which is slightly different as compared to mine, don't try to realign your financial model with my numbers. You have used a different set of assumption as compared to mine based on your own business logic, which is beautifully appreciable, right? So don't try to do it exactly the way in which I am getting from a number standpoint. Process wise, you have to do it exactly as compared to what I'm doing, right? Is everybody with me? Have you all understood what I'm talking about? From a process standpoint, you have to do it the way exactly I am doing it. But if your numbers are a little different, I really appreciate it because you are willing to take that risk at this learning stage itself. That let me try. I will pick up few different numbers. Let's see what are my numbers coming in. It's beautiful, trust me, right? And you will actually feel a totally different level of confidence once you do it yourself. All right. So I will really appreciate if any of you wants to go by that route as well. Okay? And I will certainly encourage that as well. So this is the formula. Formula is in column M. Column M dekhte rahiye, you will not face any challenge at all. Then coming to your employee cost. Employee cost, again, very similar calculation, just like you have done for revenue. You simply need to add the growth percentage of 10% that we have considered. This is the formula. Then other expenses, for a minute, just skip that. We will directly move to EBITDA. And EBITDA is going to be a function of revenue, right? It's going to be revenue multiplied by EBITDA margin. So that gives you revenue multiplied by EBITDA margin. Because that's the bare minimum targeted EBITDA margin that we have considered on a conservative basis. COGS is going to be simply a percentage of revenue. So revenue multiplied by the COGS percentage that we have considered here. This is 54.8%. This number you need to multiply it by 371. That's how you get 203. And this is the formula. All right. Now you will understand what is balance net of EBITDA. Everybody's done till EBITDA, by the way, till this stage. Is everybody through with EBITDA number? Okay, let's wait. Let's wait. I can see a few people want me to wait. It's absolutely fine. Rashmi, what do you want me to explain again? Yeah, my fully completed Excel spreadsheet will be shared with each one of you. Do not worry about that. EBITDA multiplication. Yeah, this is what you need to do. Focus on the formula. So the formula is H32, which is revenue. Revenue needs to be multiplied by this percentage, which is the targeted EBITDA margin that we have considered on the most conservative side going forward. This is the formula. H32 into H16. Now, guys, can we move forward? Chalo, jaldi. Let me know. Sure, Ashok, the recorded version will be shared with you. Don't worry. All right. Now, the meaning of balance net of EBITDA is, okay, see what happens is in other expenses, you will have a variety of line items. Okay. You will have office expense, you will have rent paid, you will have property taxes, printing and stationery, postage and telegram, advertising, marketing. So many line items will be there in other expenses. Okay. Now, I am not being very specific and cringy about each and every small line item which is part of my other expense bracket. कि मेरा प्रिंटिंग में कितना खर्चा होगा, स्टेशनरी में कितना खर्चा होगा, प्रॉपर्टी टैक्सेस कितना भरूंगा, what is my legal and professional fee, what is the audit fees that I'm going to be paying this year. I don't want to be very specific about each and every line item of the other expenses line item. Okay. What I will say is I have a targeted EBITDA margin of close to 15% on my business, right? So whatever falls between my gross profit, employee cost, and the EBITDA number is what will effectively become part of my other expense bracket. Okay. So how I will calculate other expenses is by doing gross profit minus the employee cost and minus I will do EBITDA. That's how I will get the other expense numbers. Radhika, don't worry. Right now, my suggestion to you would be that please stay in the process. Just try to gather as much as possible. The session is getting recorded. The recorded version will be shared with you anyway. But it is very important for you to stay in the process because in the recorded version, you will not be able to ask doubts. Please understand that, right? So right now, my suggestion, stay in the process. You will fairly be able to understand what's going on. Yeah. Perfect. Done, guys? Other expenses done? Then coming to other income. Other income is an absolutely irrelevant line item for me. Because what is other income? It is interest income earned on FD. I am making a financial model for decision making. In my decision making process, I am dealing with only operating line items. All my other non-operating income is absolutely irrelevant, right? So I will continue to keep this line item at the same level, assuming that there will be no change in the investment balance and there will be no change in the income that we will be earning going forward as well. Just let me know that. Just let me know once you all are done till this point in the chat box. Yeah, Geet, in that case, you can do that. Other income is basically interest on FD, dividend from mutual funds, forex gain, all of this. It's not an operational line item that I need to be worried about as such. I will do the same when I come to my current investments in the balance sheet also. I will continue to keep them at the same level. That does not hamper my decision making in any case. It's anyway excess cash that I don't have to use in business is what I'm going to go ahead and invest somewhere else, right? That's how it is. Depreciation and finance cost we need to keep pending because both these line items will come from separate schedules. Okay. So the separate schedules will be created later on. Right now we have to keep that pending. Then coming to taxes. Taxes is a simple calculation. Profit before tax and you multiply it by the tax rate from the profit and loss assumption. Yeah. So Siddharth, for other expense, what we have done is we are not being very specific about all the small line items that will become part of the other expenses bracket, which is this expense payable, that expense paid, legal and professional fees, property taxes, printing and stationery, advertising, marketing. We are not being specific about each and every small line item. We are saying that this is a whole bracket which will become, I would say, which will get calculated by considering gross profit minus employee cost and my targeted EBITDA margin. So that's how it comes as a balancing figure, and that is what we have taken. Right, Siddharth? No, so in manufacturing company, Raj, the scrap sale that you are talking about comes as part of other operating income. अच्छा, let me show you that. जब आप P&L में देखोगे यहाँ पे, you have revenue from operations gross, less excise, then you have revenue from operations net. This is net of taxes. Okay. After that, you have other operating revenue, and after that, you have total operating revenue. तो आप जो scrap sale बोल रहे हो ना, it is operational, but it is just minuscule in terms of line item from a materiality standpoint, right? So that will become part of other operating revenue. The other income that you see here, this is your non-operating income. Right, Raj? All right. So our profit and loss statement, except the depreciation and the finance cost element, is done. Profit and loss statement except the depreciation and finance cost element is done, my friend. It is done. We are moving forward to the balance sheet. Balance. Let's come down. Come to the balance sheet. Come to the balance sheet. Let's start from the balance sheet. Balance sheet में fixed asset. For fixed asset, we will create a separate schedule. So I don't need to put anything here. Okay. Now, is everybody with me? Is each one of you with me? Yogita, you can skip the tax calculation for the moment. Let's get the balance sheet headed. And my fully completed Excel sheet will 100% anyway be shared with you. This is a line item that once you look at my sheet, you will for sure be able to understand where you've gone wrong. Because abhi main wo samajh nahi paunga unless I don't see your Excel sheet. So this is that one challenge that we'll have to live with. Yeah, but don't worry, my Excel sheet will solve your problem. Yeah. Coming to the balance sheet, everyone's with me? Yeah. Now, there are a few line items in the balance sheet which I am going to keep at the same level. Okay. There are a few line items in the balance sheet that I am going to keep at the same level. Why are these line items continuing to remain at the same level is an explanation that I have provided to you in the PDF notes that is given. Okay. The PDF notes very clearly explains why those line items will continue to remain at the same level. Today, I will not use your time to explain them again. Okay. It's already there in the notes. You read the notes, you will be more than enough. I would say it will be a clearer enough explanation for you to understand. All right. So don't worry. Let's get those line items cleared out first. Non-current investments and other non-current assets continues to remain at the same level. Go ahead. करते जाओ, एक एक मैं बोल रहा हूं, करते जाओ. Current investments continues to remain at the same level. Other current assets continues to remain at the same level. Are you done with all the 4 assets that continue to remain at the same level? Non-current investments, other non-current assets, current investments, other current assets. Done, guys? कि बीच बीच में मैं जो माउस यूज कर रहा हूं, दैट इज बिकॉज आई एम ऑपरेटिंग जूम अलोंग साइड. एक्सेल में आई एम नॉट यूजिंग माउस. एक्सेल इज fully keyboard driven. Done, guys? Yeah. Then come to liabilities. There are line items in the liabilities which will continue to remain at the same level. For example, other long-term liabilities and long-term provisions. Short-term provisions also. Share capital also. Done till here? I am waiting here for 120 seconds. I want to know from all of you, are you through with the balance sheet line items that will continue to remain at the same level from assets and liabilities perspective both? I am waiting here for 120 seconds. Let me know. Chalo, I will write for you what remains at the same level so that you understand. ठीक है? चलो, मैंने लिख दिया आपके लिए. What continues to remain at the same level both on the asset side and in the liability side as well. Rashmi, why they have to remain at the same level? The explanation is part of the notes that were provided to you. Today, I will not use any of your time to understand why it is being done that way. Once you take a read of that PDF, you will very clearly be able to understand. All right. And I seriously want all of you all to go through the PDF before you come for tomorrow. Okay. Before you come for tomorrow, please go through the PDF. In any of these line items, why they continue to remain at the same level, even after reading the PDF, if you have a question, come back to me tomorrow with questions. I'll be more than happy to answer. Okay. Today, I don't want to use your time because the PDF is more than enough. Yeah. Manan, the link that I had provided a while back, मैंने एक link भेजी थी अभी chat पे. The link has the Excel file, the PDF and the shortcuts PDF, all 3 of them. Yeah. डन? नहीं नहीं, अभी खत्म खत्म नहीं हुआ है, अभी बैलेंस शीट खत्म नहीं हुई है, टोटल करने मत जाओ, कोई भी टोटल मत करो, बैलेंस शीट खत्म नहीं हुई है अभी। Siddharth, till 10 p.m. 7 to 10 is the timing. I will not use a minute more than 10 p.m. Don't worry. Chalo, done. 15 seconds. I want the entire batch to confirm to me in the chat box. Are you done till this stage? Wow. Done. Chalo, great. Okay. So this is done. Now I want you to come to the reserves and surplus. Come to reserves and surplus. Can I say reserves and surplus may I will keep adding the profit for the year every year? In the reserves and surplus, can I say I will keep adding the profit after tax every year? Right? So what I will do, I will have the previous year figure plus the current year's profits, which is this. Bharat, short-term borrowings at the same level, because if you see, for all the historical years, the company has been using that much finance for their short-term working capital requirements. So it is safe to assume that it will continue to remain at the same level going forward as well. Right, Bharat? Okay. So reserves and surplus is done. Now, those four line items for which we have calculated these days. Surinder, in reserves and surplus, you basically need to add the profit after tax figure, which is this 46, 52, 57 every year. That is what you need to do, right? For all these days, function, all the calculations that we have done, now we are going to use them. Okay, now we are going to use them. Let's come to first figure, which is inventory days. In inventory days, now we are going to perform a reverse calculation. हमने पहले days calculation किया by doing inventory divided by COGS into 365. Now we are going to do reverse. We will do COGS multiplied by inventory days divided by 365. That's how you will get the number. All right. Chalo, let's do this. You have a COGS figure, which is this 203. Multiply it by 93. Okay. When I do COGS of the year multiplied by 93, which is the inventory days for the entire year. So I will get inventory days for the entire year, right? 864 crores is what I get. But I need a number as at the balance sheet date, which is why you will divide by 365. Yeah, this is the formula. Done with inventory. Then we need to go to receivables. Receivable will be a simple function of sales, just like inventory is of COGS, receivable is of sales, right? So sales multiplied by the days, which is 72 divided by 365. Done, guys, till here? Sorry. Done till here? Then your cash and cash equivalents is a number which will come from the closing balance of the cash flow statement. So that is not something that we will put right now. Come to liabilities, your trade payable and other current liabilities. Rajkumar, don't worry, just stay in the process. Your numbers are a little different because you have taken different assumptions as compared to mine, which is absolutely okay. You will actually feel a lot more confident when, irrespective of you taking different numbers, your balance sheet will still tally, right? It will tally, don't worry. So stay in the process, just stay in the process. Guys, are you able to see me, hear me? Is the screen visible? One quick check with each one of you. Everything's fine? Everything working fine? Am I moving? Guys, am I moving? Perfect. Okay. Thank you. Thanks for that quick update. Coming to trade payables again, it will be a function of COGS. That's the way in which we had calculated it earlier as well. So 203 multiplied by the trade payables days, which is what, 51 what we had taken, yeah, and divide that by 365. So these are the numbers that I'm getting. Yeah. Likewise, I will calculate the other current liabilities as a days function of the total expenses, which is this number multiply by 45 and divide by 365. Yes, Aryan, what you're saying is absolutely correct. In the ideal scenario, I will calculate trade payables as a function of raw material purchases because that is basically my vendor payment. So what you're saying is absolutely correct. But when we build up a financial model basis, this format of financial statements, the one that you will get on BSC, NSC, Google Finance, Yahoo Finance, Money Control websites, you will not necessarily have the detailed out information of what is actually the raw material purchase per se. वो information आपको नहीं मिल पाएगा, which is why you use a larger metric, which is COGS. Right, Aryan? You can get that in notes, Nagarjuna, 100%. But then for that, you are saying that you will be able to use 4 PDF annual reports of a company, all the annual reports, which are upwards of 200, 300 pager documents for the historical period. You will scan all of them and then pick up those numbers and then put it, is what the exercise asks for, you know. So that's the formula for other current liabilities. Shonika, I hope you are able to grab hold of that. Done. Now what remains in the balance sheet are 3 things. 1, long-term debt. 2nd, fixed assets. And 3rd, cash. Okay. There are 3 line items that remain in the balance sheet. What are the 3 line items that remain in the balance sheet? You have fixed assets, you have long-term debt, and the cash. For fixed asset and long-term debt, we need to create a separate schedule. Okay. So come downwards on your Excel sheet. Go down, go down, go down. There'll be a supporting schedule. You can see there's a supporting schedule tab. This is where we will create the schedules. Okay, let's get started. You have the fixed asset schedule. You will have opening balance, add additions, less sale, less depreciation, which gives you the closing balance. Okay, just write this much first. In the supporting schedules, row number 141. Guys, I'll just be back in a minute. Sure, done. Have you all written this much? Let's get started. Now, can I say the opening balance of my fixed asset will be nothing but the closing balance of previous year? Right, guys? So, your opening balance for the forecasted year one will be nothing but the closing balance of historical year four, which is this 74. Yeah, that's where you need to get 74 from. Just let me know once you have taken 74. 74 comes from G61. Done, guys? Then for additions, you need to take from capex. Additions need to come from capex, which is this, the capex assumption in the balance sheet. Right? That will be my addition to fixed asset. Have you done this much? Asset sale, we are not assuming anything. And additions to fixed assets also, we have assumed it will happen at the end of the year. Yeah. Which means we need to calculate depreciation on the opening balance, right? So opening balance multiplied by the depreciation rate, which is this, is what will give me the depreciation. Capex, so Garima, Capex is part of balance sheet assumptions, not part of balance sheet, which is part of balance sheet assumptions. You can see this. And here we have taken it as a negative number because we want to show cash outflow. But in the additions, you will show it as a positive number because it is addition to fixed asset. So you just have to add a simple negative sign before that. Yeah, this is where it is coming from. It's coming from H26. Which gives me the closing balance of 74 plus 9 minus 0 minus 7.53. And my second year's opening balance will be previous year's closing balance. Right? Depreciation is calculated on the opening balance. So you will pick up the 74 number, which is the opening balance, and multiply it with the rate of depreciation from the profit and loss assumption, which is this 10%. Right? That is what you need to take. Yeah. So Saurabh, sale, the idea of taking sale 0 is that we are assuming that company is not going to sell any of its fixed assets as such. That's the idea. Yeah. Is everybody getting these figures for the closing balance? For the entire fixed asset schedule, you all are getting the same figures. Opening, but this 74.57 will come from here. Ishika, Dipanshu, what is the challenge? Can you let me know where are you facing any issue? Slightly different is okay because आपका depreciation rate और मेरे depreciation rate में फर्क है, which is absolutely fine. Don't worry about the exact number. From a process standpoint, are you getting numbers more or less correct? Supporting schedules are being created, Ankit, because we are yet to fulfill the numbers from balance sheet and P&L perspective both. So these numbers will move up in the P&L and balance sheet. Mohammed Imran, no worries. My figure and your figures could be different. It's absolutely fine. If from a process standpoint you've done correctly, it's 100% good. This is the closing balance formula. Done, guys. Likewise, we need to create a loan schedule also. लिखो loan schedule नीचे. We will have opening balance, add less additions, repayment, closing balance. उसके नीचे आएगा फाइनेंस कॉस्ट. ठीक है. Can we make the loan schedule similarly? So your opening balance will be long-term borrowings, which is this 6. Yeah. Additions and repayment, can I say you will assume from here, which is my debt assumption. Opening balance of fixed asset, Harsh, is basically closing balance of the previous year. And this 74.57 comes from previous year's closing balance. Right, Harsh? Formula for what? Shonika, don't worry. You can look at my Excel sheet later on. You will be able to get that. Right? Are you all getting the loan schedule correct till this point? That's the repayment. Pranjal, that's the repayment of the loan. Not getting 4 and 2 in opening balance because you have not linked it. You need to link it like this. Your opening balance of next year will be the closing balance of the previous year. Right? Then let's calculate the finance cost. This also we are assuming at the end of the year. You will have opening balance multiplied by the finance cost rate that we have taken in the P&L assumptions. This will be the long-term finance cost. Likewise, you will calculate a short-term finance cost. So that's the short-term balance on which I will calculate finance cost at the same rate because this is the blended finance cost rate. Done, guys? Till this stage, are y'all with me? Yeah, my fully completed Excel sheet will be with you. Don't worry. I will be sharing that right after this call. Done guys, up until this stage. इसको खाली total कर लो so that you get a total finance cost. Sure, Krishan, for sure. ठीक है. चलो, at this stage, I would suggest at this stage, let's stop this, right? The impacts of all the fixed asset schedule line items and the loan schedule and the finance cost calculations that we've done, we will try and complete them tomorrow. It's absolutely no problem. Let's pause at this stage is what my suggestion is. All right. So my fully completed Excel sheet will be shared with each one of you. The recorded version of this call will also be shared with all of you, right? Any of you all has any questions in the chat box, you can let me know. Sir, can you please share your LinkedIn profile? LinkedIn profile मैंने नहीं share किया क्या पहले? This is the LinkedIn profile. Sir, okay, ठीक है. Guys, any of you all has any questions? I am more than happy to answer. Thanks, Priyanshi. Naveen, thank you so much. COGS, we have reduced 0.5% in terms of the economies of scale. Yes. Recording will be shared after this. Yeah. So see what happens is a 3-hour call for it to get loaded. It takes some time. Oh, half an hour to 45 minutes lag jata hai Zoom se load hone ko. Then I upload it. Then the support team gets it. Then support team uploads it at the backend. Then you all get it. So this might take a little time, but the backend, the support team always tries it to send it earliest morning tomorrow, latest. Okay? So that's how you'll be able to get access to it. So Rachita, that 10% is not exactly 10%. ये जो आप 10% बोल रहे हो, this is not exactly 10%. It's approximately 10 point something. So it's 10.18 जैसा. It's just that because it is rounded off, आपको वो exact 10% दिख रहा है, but that's not it is. That's not how it is. Yeah. Priyanshi learned a lot. Thank you. Saurabh, thank you. Balance sheet tally आज नहीं हो सकती because cash flow statement अभी नहीं बना है. So we need to wait for that. Anupama, thank you so much. Nishta, thanks a lot. Yeah, I am going to be sharing the bonus that I am supposed to be sharing with each one of you as well. So doubt clearing sessions will be there today, tomorrow, both of them. Yeah. Chalo, give me a minute. Let me share that bonus with you as well because I don't want any of you all to miss out on that. So what do you guys need to? Acha. My question to all of you. How many of you use the stock prices of any listed company in any of your work related assignments? How many of you use stock related? हाँ बोलो. किसी भी कंपनी के स्टॉक प्राइस अगर आपको निकालने हो तो आप क्या करते हो? If you want the stock price of any company for any number of years, समझो 30 साल, 40 साल, 50 साल का इंफॉर्मेशन चाहिए past. So what do you do? BSC आर्काइव, NSC में तो एक टाइम पे एक ही साल का डेटा निकलता होगा. NSC gives you 1 year information, right? गूगल कर लोगे नहीं, पर आपको हाई प्राइस चाहिए, ओपनिंग प्राइस, क्लोजिंग प्राइस, हाई प्राइस, लो प्राइस, वॉल्यूम वेटेड प्राइस, डेट के साथ सब कुछ चाहिए, तो आप क्या करते हो? Company uses Bloomberg and Thomson. Okay, ठीक है. Bow copy. Okay. I want you guys to do one thing. You all had written one message to me, right? Right at the beginning of this session, you all had written one message to me. Open your WhatsApp. Just open your WhatsApp. On the same number, write price. On the same WhatsApp number, just write price. Not on the chat box, on the WhatsApp number. Yeah. You must have received one link. That link will help you to get the historical data for any listed company for any number of years in less than 30 seconds. Okay, just watch that short video. It will be very useful information for you, is what I believe. If you find it useful, please let me know. Aega. Don't worry, it will come to you. Don't worry. It's only because a lot of people have written that message. You will get it. Don't worry. Right, guys? So I hope that is useful information to you. And if you find it useful, please do share it with any of your other friends or colleagues. And if they also might find it useful, it will be, I would say they might find it useful, basically. If you feel that they might find it useful, please do share it. You just need to send this message price. That's it. I think that should serve the purpose. Yeah, I can already see a lot of people sending that message. Yeah. This works for index also. अभी आप लोग इतना पूछ रहे हो, मैं आपको हाथों हाथ दिखा देता हूँ. चलो, what do you need to do? ठीक है. Yeah. All right. Yeah. My fully completed Excel sheet will be shared with all of you guys. Don't worry. This works for index also. You can write Nifty, तो आपको Nifty के prices मिल जाएंगे. Yeah. And my fully completed Excel spreadsheet will be shared with each one of you. Don't worry. Message आएगा. Don't worry. Message आएगा. Sir, not able to connect with you on LinkedIn. See, LinkedIn पे ना मेरा, actually I'll tell you, I have this creator profile on my LinkedIn profile, which is why perhaps you might see a follow button once you come to my LinkedIn page. You might see a follow button somewhere here. वो कहाँ पे आता है exactly, I don't know. You might see a follow button. What you need to do is, यहाँ पे there is a more button. You can see there is more. Inside more button, there will be that connect button. तो आप वहां से connect कर पाओगे. And I use LinkedIn Premium, which is why you are not able to send messages. So I understand where you are coming from. वो more में जाके आपको connect button से करना पड़ेगा. Then perhaps you should be able to send a message, is what I recall. The last time I had used LinkedIn in this fashion, I think that is the way to probably go about it. आप एक बार check कर लीजिए. If you are able to do it, that's great. ठीक है, guys, any questions? More than happy to answer. If you want to ask your questions tomorrow, I am more than happy to answer. Absolutely fine. No problem. Shritima, stock history function works in Excel 365. Closing debtor is not taken average. Debtor में average लेना जरूरी नहीं है, Mahindra, because it's very simple thing that I have sold you a 10 rupee worth of Parle-G biscuit and I need to take 10 rupees from you. It's as simple as that. That's how it is, right? No, we do not adjust GST, Pranjal. वो सब नहीं करते usually, नहीं करते. because the total operating revenue that we have taken excludes the impact of all the taxes. Right, Pranjal? Yes, Yogesh, we can use this data for the analysis that you might want to. Absolutely. 100% that information is useful. Amit says the session was good. Thank you, Amit. Sir, can you share your Instagram account? वो मैंने स्टार्टिंग में भेजा था ना आपको Instagram. आप इसमें ही जाके भी देख सकते हो. I think the first message which you shared, hi-fm वाला, उसमें वो जो PDF आपको आई होगी, उस PDF में you must have received that link. That link might have the link to my all the social media pages basically. तो वहां से आप connect कर सकते हो. Yeah, sure. Go ahead with your questions. Sarita, thank you so much. Yeah, for people who don't have any specific questions, guys, you can, you all can, I would say, leave the session. Absolutely no problem. I will 100% see you all tomorrow. Yeah. Bonus. So, Nishit Kumar, the price message that you need to send, आपको जो ये भेजना था, this is where the bonus is. This is the bonus link. Shravan, thank you. Mohammad Imran, thank you so much. Sharanya Rakshit, thank you. Deepthishri Rao, thank you so much. Ishwari, thank you so much. Sure. Nilesh, I'll see you tomorrow. Thank you. Shreya, thanks a lot. Jagan, thank you. Amit, there's a lot of things that needs to be shared tomorrow. Bonus message you will get very shortly. Don't worry. आपने अगर वो प्राइस मैसेज भेज दिया है तो आपको रिप्लाई आ जाएगा. डू नॉट वरी. या all right. Thanks, guys. Thank you so much. Bye-bye. Gaurav, thanks a lot. Nilofer, thank you. Acha, there are a lot of people who are asking career-related questions. For example, I want to get into investment banking. How can we switch a job from BPO to finance? See, what happens is career-related questions I can answer right now. That's not a problem. But I will have to go on and on and on. And then I'll have to have an interactive discussion with you because I need to understand what is your background, right? कैसा होगा कि मैं आपको गाइड कर दूंगा and शायद गाइडेंस मेरे साइड से कुछ गलत ना हो जाए, which is why I would want to understand your background a little more in detail. So my request would be, please get in touch with me on LinkedIn. Let's have a real quick small chat so that I'll be in a much better position to solve your specific career related questions, right? Thank you so much, everyone. I am really grateful for all your lovely messages which you all are sending. Thanks a lot. Price wala message aa jayega. Don't worry. For all the people who did not get a response to the price message, don't worry. You can send that message tomorrow also. You will certainly get a response. It's absolutely fine. Don't worry. काफी बार क्या होता है? See, it is a auto response related thing, right? So, and it might have some limit of say maybe 500 messages or 600 messages, something like that, which is why a few of you all might not have received that link. Don't worry. You will get that message. Yeah. All the other bonuses that have been promised to you will come tomorrow. Yeah, the recorded version will be shared. Yes, perfect. Yogesh, tomorrow's session does not get recorded. I'm sorry for that. I myself don't have the authority to do that. So that's the point. Saurav says, nice session. Saurav, thank you so much. No, so once there are metrics involved in forecasting, the way in which we are doing is exactly the way in which it gets done as well. In a few line items, from the stage of company perspective, things might change. For example, if I have a company which is in, say, early growth stage, or say in a growth stage, the way in which I would consider a revenue assumption vis-a-vis the way in which I would consider a capital expenditure assumption, all of these things would typically change. So what you're saying is correct, right, Vansh? Sure, Yogesh, I'm more than happy to help you out as much as possible from my end. No, Vansh, that's not a part of this session. Okay, looks like it. Guys, any further question do you all want me to like take tomorrow, or you have any questions? I am more than happy to answer. Please do let me know. If you are done, then please do let me know that you are done as well, so that we can move towards closure. Arshdeep, can you please raise your question again? Yogesh is done. Okay. Nisit Kumar is also done. That's great. Ganat Chakri is also done. Awesome. All right. Yes, I do take Excel courses as well. Yes, once I do have a seminar on that as well, which you will be notified about tomorrow. So the formula is very similar to what you would do. So see, Excel does not change any specific formula. Excel is just helping you to calculate the way in which it will get calculated. So all the formulas, ROA, ROE, DER, NIMR, all of those formulas are very standardized formulas which will remain irrespective. Sure, Nivi, thank you. Yogesh, let's have a quick chat on this separately. Kiran Mai, I'm really sorry, but tomorrow's session does not get recorded. I don't have the authority to do that. I can ensure that you get compensated in maybe some other batch if you wish to. Vansh, thanks a lot. Okay. Chalo, looks like it. Shrikant, the answer is yes. You will come to know about this tomorrow itself. Okay, perfect. Okay. Chalo, guys. I will hope to see all of you all tomorrow with rockstar power packed information that's coming your way tomorrow. Believe me, you cannot imagine what's coming your way tomorrow. All right, chalo. Bye, take care. I'll see all of you all back again 7 p.m. tomorrow is when we meet again. All right, chalo. Bye, take care. Bye.